Okay, so it looks like we've got everything ready and good to go. Now, if you're on the session, thank you again for joining me on this daily market analysis. If you're new to the session, do drop a message, say hi, let me know where you're joining us from. The link for the Discord channel is there in the descriptions. Do join us on Discord if you haven't already. But I'm streaming live most of the time, so I'm also available live on YouTube as well. For all the regulars, a big welcome back. Thank you again for joining me on this daily market analysis on the 19th of August. It is Monday. Like I was just saying before, my audio didn't realize that my audio didn't work. Um, it was supposed to be a quiet Monday. It was supposed to be a quiet Monday with no major currency news on the horizon. But yet we saw the dollar continue on from Friday's weakness to push to the downside. Last I checked, it was at 102, the round number support. With the dollar dropping so strongly, we also saw the US yen dropping to the downside. I was very happy with that. I caught moves on the US yen to the downside, trading it down, scalping, and also trading it down with a intraday kind of trade where it was closed out about 150 pips on one trade. Right, so I was saying that's pretty much me done for the week, but obviously we can build on that as well. Hey Lini, how you doing? Hey John, thanks for staying on. Now, with all that said, you can help me out massively by remembering to click on that like and subscribe button if you haven't already. And if you have any questions at any point in time, please feel free to put it into the chat and let me know. Now, quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to trade financial products, so please remember that your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. Now, with all that said, take that away. Look, like I was just saying, today was supposed to be a little bit quiet, a little bit more of a trending scenario. Later into the day, when the US opens, we would have seen markets move slowly and gradually. But what we saw, just give you a bit of a snapshot view first, was the dollar it started at this point at 102.40, retraced slightly, showed a bit of a fake move or retracement move, and then push right down, continuation right down to that 102 round number level, now showing possibly some retracement back up. Right, with that we also saw a lot of movement right across the board, but especially for me, I was focused on the US yen, trading it down. I was scalping within that candle. I was also had a trade down which closed out at 150 pips, actually 148. I just saw I closed out slightly before the take profit, 148 pips to the downside. So that's done, and this was the next move that we were looking at. Right? So back to the news. What has happened since the last time we spoke? Rewind back to Friday. We did not have a session on Friday. I was a bit busy with all kinds of stuff. So we did not have a session on Friday. I hope you guys traded well. Hope you guys did well on Friday. Okay, it was again another day with not a lot of news, but yet we did see prices move quite well, especially as market started digesting, right, or reacting to the dovishness of the FOMC. Right, so again back to the what was it called, CME what right, back to the CME Fed Watch tool. You see that on September 18th, we're pretty much, this was 1 week ago, it was a 50% chance that we could see a 50 basis point rate cut. Now it's down to a 28.5 with a 71% chance of a 25 basis point rate cut. Right, so we're looking at almost a confirmation of a 25 basis point rate cut to come from the Fed Reserve on the 18th of September. Obviously, that's still a month away. We're on the 19th now, so it's a month away. A lot of things can change, but I don't think that unless something massive changes, I don't think that this is going to shift, right? I think we're almost definitely going to see a rate cut. It's only about how much. At this point, I think 25 basis points seems to be the most a good start. All right, so that was the news, or rather the lack of news, but a confirmation or a solidification or a digestion of the dovishness from the Fed Reserve, which saw the dollar index turn right down from Friday. Also, something to note was that on Thursday, we were talking about the inverted head and shoulder on the dollar index, and that actually worked out very well, where it formed the inverted head and shoulder. When it broke above that 102.70 level, it went straight up to that point and even higher towards 103.20 before turning right back down again. Okay, now fast forward to this week. Not just today, but this week. Today, not a lot of news to be had, but into tomorrow, we do have some news, not too concerned. We'll have Canadian CPI numbers to be looking at. I'll tell you more about that during tomorrow's session. That's going to bring some volatility to the loonie. Then we have FOMC meeting minutes. I don't think it's going to do too much. Meeting minutes of the previous meeting. We know they didn't do anything back then, so I don't think it's going to do too much this time around. PMI numbers for the Eurozone, for the UK, and for the US on Thursday. Again, PMI numbers used to be huge when I was back in 2000 and between 2008 to 2013, 14. It was huge. It had good volatility on PMI release. Not so much now. Also because you'll notice that it's all pretty much borderline cases, and they don't change. It hasn't changed that much, right? So it doesn't have that similar impact that it used to have. Then on to Friday, we have retail sales number to come for the Canadians, and Fed Chair Powell speaking at the Economic Outlook at the Jackson Hole Economic Policy Symposium, right? So Jackson Hole is upon us again on Saturday. It starts on Sunday. It continues. So I feel like generally what I used to say for the previous Jackson Hole symposiums was that in the lead up to the Jackson Hole, it was likely to be a little bit more quiet, a little bit more consolidative, up until the Jackson Hole, where they could, the different central bankers would give some indication of their policy moving forward. I think this time around, there seems to be a little bit more likelihood that in the lead up to the Jackson Hole symposium, we're going to see a lot of speculation, right? That central bankers are going to be dovish, a lot of speculation. Then I think during the Jackson Hole symposium, it's possibly going to come in, or central bankers are possibly going to come in and reinforce that a little bit, but we're going to see a rebound before continuation back down again. Okay, so with all that said, main thing is for today, no major news to be had, which means that we should still be looking at maybe a bit of a retracement before a continuation right across the board. So looking at the dollar index here, right? I'll take the inverted head and shoulder away because that's done. Okay, take that away. And if I scroll right up, we don't need that. That's broken and done. We can take that away for now. I don't need the Bollinger for now as well. So I'm just checking these levels. 50% is there, still held. Came right back down. 38.2 is there. So those levels are okay. Technically don't need all that. I'll take that one away. I just want to clean up the chart a bit. We have 50 there. We have that downward trend line still holding prices lower. Now the question is, if the dollar index breaks below 102, where could it head towards? Looking at the H4, so this is my 102 round number support level. Pull it right across, you'd see that, put it down to 102, right there. Okay, so now if it breaks like what happened the last time round, okay, so we saw this happen in December last year, where it came right down to 102. December, I'll show you an example here. So this December 14th last year was when there was a very big speculation that the Fed Reserve could look to cut rates early next year or early 2024, like in March 2024. That's why we saw the dollar index push strongly to the downside, as there was speculation that the Fed Reserve could cut rates early in the year, right? And then it came down to that 102 level by the 15th. So within a day, 14th, within a day, it pushed right down to 102, bounced off 102 slightly, and you see that this move came right back up to that 38.2 level. If you took the whole move, came still about that 38.2 level, retrace before pushing back down, breaking 102 and continued down. By the end of December into the new year, it was at 100. So it's at 100.78. So 101 is right there. We catch 100.7. Let's do a nice round number at 100.80. Right, so it pushed right down. Then you also notice that it kind of came down here and consolidated a little bit, which was at about that 101.45 level. Right, came down, hesitated a little bit before pushing down, tested this point, and then I think that's where they said, no, Fed Reserve still looking at data, not likely to cut, or tempering down the idea that they will cut in March, and that's why we saw the dollar index push right back up from that 100.80 level all the way back up to as high as 104.99 or 105, and then came right back down, pushed right up to 106, and then like what we say, that was all history. Now where we are, right down to that 102 level again. So back to the H1 time frame, right? Back to the H1 time frame. The big question here now is reaction, looking for that reaction at 102, right? Looking for that reaction at 102. If it breaks, it's going to trade down to firstly that 101.45 level. Again, there's no major news. So I do think it can trade down, but maybe needs a little bit more of something to shock it, to stimulate it to the downside. At this point, if you look at this move down, it could retrace, right? It could bounce off this 102 level, push up slightly before turning back down again. So what I'm looking out for is that it also should stay below this 102.35 level. Right, it needs to stay below 102.35 to signal that continuation of the downside. Right, so what I mean is that it could do this, could bounce back up before pushing back down again, looking for that reaction. If it breaks, we're looking for that to push to the downside. Okay, or even if it doesn't, then you sit there, look for it to break and to the downside. So now with that, today is the 19th of August. Dollar index looking for reaction at 102. Support needs to stay below 102.35. Beyond 102 could trade down to 101.45. There we go. Okay, reacting, looking for a reaction at this support level. It needs to stay below 102.35. If it breaks beyond 102, could trade down to 101.45. Any questions with that? All good? Put into the chat and let me know. Push that a bit to the side so we can see the candle. Okay, I'm quite happy with that. I do think that there should be a bit of a retrace. You know, we've seen that happen as well. We've seen that push down, bounce back up a little bit, so that retrace before coming right back down. Small retrace slash consolidation before coming back down. So it could retrace or consolidate here before continuing lower again. I just saw John said I was away on Friday and price move. It happens. It's okay. There's always a next move coming out. Now with that, then looking at the Kiwi, right? Looking at the Kiwi dollar, big thing to notice here is that, well, firstly, we don't need any of this. Yeah, no, we'll keep that. Let me see where's 50. Just before 50 there. So we take that area as a consideration. I don't need that point anymore. Okay, then we take that away. Right, so this was our trade on Thursday, or a bit. I got in a bit earlier on Thursday. Got a tiny trade on that. Take that away. It's a long time ago now. That's actually broken, so I don't actually want that because it's broken at 38.2. I'll keep 50 there. Okay. So we've seen this move. It's retraced down to about that 50% level. It's bounced off 50. It's pushed right back up towards this point. The thing I was going to pay attention to is the possibility with the dollar. We're looking at the reaction at 102. If it breaks back up, say for example something happens or they say that they're not going to cut rates anymore and it breaks right back up, then that could play into that double top formation here on the Kiwi dollar. All right. With no major news on the Kiwi in the lead up on the horizon, I think it'll all be down to the dollar index. I don't see that happening at this point. So although there might be a double top that could be a double top forming on the Kiwi dollar, I think it's quite a low likelihood for that. Now, I'm looking at this, I'm thinking that it needs to stay above 6060 to push to the upside. Following on with dollar weakness, I think what's going to happen is it'll sit there, it'll retrace slightly before we see that push back up. Okay. I'm just thinking whether to consider that double top. No. In fact, I'll give it a bit more space. I think it could even come down to there. So just need to stay above that point. If it goes past 6045, then double top, you would sell down, stop loss 20, take profit, you have 55 to the downside. That's the double top, the reversal that we're looking at. I'm thinking if it stays there, bounces back up, I would prefer that at 6-1, break above that round number, 20 pip stop loss, 50 pip take profit towards that previous swing high that we saw on the 8th of July. Okay, so that's what I've been looking out for on the Kiwi. Looking to buy at 0.61, stop loss 20, take profit 50, 50 to the upside on dollar weakness. Then onto the Aussie, did not retrace as much as we expected before pushing back up, but it did push up, right? It did push up, breaking above that level that we were looking at. So we take that away, and we don't need that as well. What level is there? Holding. This was a question asked by John whether it's a good idea to scalp it up in a short term. I think that the round number here at 6700 is providing a little bit of resistance, a round number there. So we have that whole area. 700 is about there. So we have that whole thing providing in resistance area there. Very similar to the Kiwi, where I think that it could retrace slightly or consolidate, but I want to see it break upwards. If you look at it on H4, a good nice push to the upside. So I kind of like the Kiwi reversing more than the Aussie reversing. But no matter what it does, I wouldn't be too happy to sell it down. I think it's going to sit there. I'm looking for it to break upwards. Then I would go long. I wouldn't scalp it to 6-7. I'll look for it to break 6-7, so 6720. Stop loss 25. Take profit 75 to the upside. 6720. Buy at 0.6720. Stop loss 25. Take profit 75 to the upside. Sitting there, could retrace, could consolidate before pushing up. FX options expires 19th of August. Fine. Right. Then we look at the Kiwi sitting across, maybe consolidating a bit of retracement before pushing up. Same thing with the Aussie. Then looking at the Aussie Kiwi, it's done that. So it came right down to that 50% level and bounce. We have 60% still holding, 61.8 still holding in that area. Okay, so I'll take that, push it right up there. Still range bound. I would say Aussie Kiwi is range bound. Wouldn't be too keen. Because why it's range bound is because the Aussie and the Kiwi are moving in tangent, with the right, if there's the right word, right? They're moving together in the same direction, so they're offsetting each other a little bit. So I think it's still in that range. Possibly what you want to be looking for is that if it breaks above 1.10560, we could trade it up towards that previous swing high, which you would be looking at about 1.1070, stop loss 20 pips, take profit 70 to the upside. Okay, but it's still range bound. I think it's going to be range bound, but we're looking for that breakout. I wouldn't be too keen. You look at that pushing up. So I think if you hold that line up, it might see in that range before pushing up. Okay, all good. Then on to the pound dollar. We've done well on this. I think this always a bit messy. We've done well on this for the pound dollar as we saw it consolidate. In fact, it retraced, bounced off at 23.6 before pushing back up again. Broke above 1.2870 to trade up 60 pips to the upside. I caught some of this on Friday. On Friday as it was pushing up. Didn't catch the whole move. Then, now at reacting, if you look at this, and you zoom in here, if you look at this, it's reacting to that 1.2960 level, forming a little bit of an indecision, looking like it might retrace slightly. Okay, then don't need that because that's broken. We have that swing level, but now if I take this all the way up, 50 is right there, 23 is right here. What you would be looking for, I don't want to be selling this down. I don't see any reason yet. So as much as we've got 23.6 there, I'm also looking at this point here. On the 16th of July, again on the 22nd, again on the 24th, and then we saw the hesitation. So it looks like pound dollar with no major news on the horizon, dollar index showing that retracement, right? We're talking about that, showing that retracement on the dollar could push back down. Looking at that, I'm starting to think, no, I'm still happy with that. Okay, so looking for it to push down. This is 5.7, this is 3.9, that's 20 pips. I actually think that we might see this retrace down. So my first thought was going to retrace down here, but I think we might see it retrace a little bit further before pushing back up again. Now my support. Right, so I don't need that. I want to catch that point there. On this point here. Now if I took that move up to this point here, 23, that would be at this point. So I'm actually thinking that it could come down. 38.2 is right here. So a bit of a confluence between the long and the short term move to the upside. Pound dollar could retrace, needs to stay above 1.29. Again, nice round number. So my nose is clean again. That's a nice area here that we're going to watch out for to bounce. And actually, I would like to see it retrace more. 1.2915, stop loss 25, take profit 50 first, 55 first, and then maybe further to the upside on the resistance level. So I'll do that instead. All right. That's what I'll be looking for on the pound dollar. Okay, so pound dollar, what I'm looking for here is that it needs to stay retest 1.29. Then we'll look to buy at 1.2915, stop loss 25, take profit 55. Take profit 55. There we go. I'm watching that dollar retrace one as well. Then on to the euro, right? Forming a little bit of that double, so that push down before going right back up again. It's forming a little bit of that double top. We have a trend line pushing it up. Right, there we go. Then we want to consider this point that we have. So it might retrace back down, very similar to the pound dollar. So retrace back down to retest 1.1. I want to see it trade up after that. H4 time frame towards that previous swing high. Yes. Okay, so back to the H1. It's sitting at 1.1042. If it pushes back down, that's a 40 pip range. Might not go the whole 40, but looking for a bit of a retrace or consolidate. And you see, right, if you notice, you should notice right now is that a lot of times we are looking at, or today especially, right, Kiwi double top forming and look, it's retracing. Aussie right at the top in consolidation. Pound dollar right at the top in consolidation. Euro dollar with a bit of a double top forming. So Kiwi double top, Euro double top, Aussie right up at the top, pound dollar right up at the top. It's all forming that similar pattern. So you just want to be extra careful, especially with the dollar at that 102 support level. So I'm looking at this to retrace and bounce. 1.1015, stop loss 20, your take profit 30 up there. I'm thinking, okay, why I'm pausing? Sorry, I just realized I just stopped talking for a moment. Why I'm pausing right now, I'm actually thinking that we're looking at all that dollar weakness. What if we considered some dollar strength, recovery, right? Comes right down, forms a double top, breaks that support, breaks that bullish trend line, to the downside, 1.0985. Stop loss 25. Take profit right down to 80, 90 pips to the downside. Sorry, my nose is killing me. Okay. So I'm looking at the possibility, I'm not saying it's going to happen, but the possibility of a double top formation, breaking that trend line and support to the downside. So 1.08, 1.09, 0.85, stop loss 25, take profit 90 to the downside. Okay. Reynaldo is asking a question. Do you usually enter with stop order or market order? Usually, I do prefer the market order, right? I do prefer entering on a market order just because I'm watching the prices all the time. Then if I don't get to watch, if I'm going off to do something else, then sometimes I feel like a move is quite close to happening. Then I would set a order, a stop order. Like for example, on the euro here, I wouldn't sit here right now and plonk in a stop order, a sell stop at 1.0985, right? Just because I want to see what happens. I don't want to spike down and come right back up. So I'll sit there, and if between now till whenever I stop watching, it gravitates down and it triggers or comes close, I'll enter a trade. If it doesn't, if it comes right down and it bounces around this point, then I might put a stop order to catch the move to the downside. Right, so it's all based on timing, whether I'm watching the charts or not, and where I see price heading in that short term. Now with that, hey Richard, how are you doing? Dollar index sitting at a long-term support level on a daily. Yes, 102 is a nice big round number on the. You see on the H4. We saw on H4. You see on the daily time frame as well. It's that number. That's why we're looking at it to retrace, possibly retrace before continuing down. We're going to see how it reacts at that 102.35 level. Okay. Euro might struggle to come down, so I'm not entirely convinced that we're going to see that happen. I know the upside is easy, right? If it pushes up, then you have that upside 1.1060, stop loss 25, take profit 60 to the upside. Yes, plus there's a rising trend line as well, so it's right in that area where anything, I mean, I hate saying this, we're doing a market analysis. I'm not here to tell you that it could go up, it could go down. But right now, at this point, really it's a bit undecided. It could do anything. Richard, are you referring to the dollar index on that? You're talking about that one there. Yep. Move that box. Oops. Oh, right there. That box away. Move that one there. Yeah, I see that. I'm just thinking of the. Oh no, I lost my box. I'm just thinking of the fundamentals. Well, sorry. Get my box back. It could. I'm not ruling out the idea that it could retrace right back up, right? But also knowing that we have that trend line. So at the most, it will come up to test that trend line before pushing back down again. It's retracing quite strongly now, especially at, from that 102. Not surprised, but we're going to see what happens from there. Okay, we're going to see that. Then onto the euro pound, did well on that. Now, as it sits along this point, 50 is done. So as it sits there, my resistance there, test. What needs to happen here? If the euro does push down, look for it to break that support to the downside. Below 8.5, we could see it trade down. 8.480, 30 pip to 60 to the downside on the euro pound. Right, that's driven by if we see the euro dollar push down, or we see the pound dollar sit there and push up, then we could see the euro pound break that support, give it a bit more space. 8480, stop loss 30, take profit 60 to the downside. Then to my favorite for today, well, for a long time and especially today, I'm very glad I closed out on my trade as it pushed right down. Had a few scalps to the downside as well. If you did get into that, you might want to close out and break even on the US yen if you got in at 146.20, right? If you got, this was a setup that we were looking at earlier today. Could have closed out before, especially as it was outside the Bollinger. If you didn't, close out at break even. I think that would be reasonable. That's my stop support turned resistance. Take away that because it's broken. Now looking at that point, 38.2. Go. No. 50. Right, bounced off. Okay. So what we're looking at here is yen push down. It's retracing, very similar to what we see on the dollar index, retracing back up. So that makes sense. As it pushes back up, stays below that resistance, we could see a continuation back down. It all comes down to what's going to happen to this guy here. So now looking at this, track down 50, 147.40. I know that level's there, but I want a more current level, which I'll put it at 147 round number. All right, so dollar yen, what we're possibly looking at here on the dollar yen is a retest and then a continuation back down, which would look like 146.80. Stop loss height at 40 pips. Take profit down 150 again. In fact, it's very similar to the trade I got in just then. I got it at 146.90. So I got it at 146.90 and then I have my 150 pip to the downside. Right, so we're looking at that for dollar yen to retrace, test and reject at 50% and 147 level, 146.80, 40 to 150. Wait for retracement to complete. Sell at 146.80, stop loss 40, take profit 150 to the downside. Look, it's already weakening. That retracement is already weakening, so it might not ever come all the way back up again. Break that low and look to sell it down. The next level you're looking out for about down there, in between those two levels. I would say actually about down there, 144. Okay, then onto the euro yen, broken again. Like we all know, we've seen the yen bouncing back up, so take that right up. See it testing 38.2, retrace. That trend line is pretty much broken, but what I'm looking out for here would be that away. What I'm looking out for here would be a retest of this level. So this one's done, and 38.2 done. I put 50 in there. Okay, so 50 in the area makes sense. I'm looking at the price levels here. So it could retrace right back up to 162.50 test and reject. So we're going to see a reaction back at this point here on the euro yen. Then we'll see what happens, especially with the euro dollar possibly pushing back down, but it looks like it's pushing back up again. Dollar is weakening. So with that, we're going to see a reaction at 162.40. Breakup will make a lot more sense. Then pound yen did all that. That was on Thursday. It was long. In the scheme of things, a long time ago. At this point here, support levels bounced off the support 50%. One there. 38. Don't actually need this for now. Okay, so now I'm looking at this. I'm considering that point. I'm looking at this, zooming it down, take that away. Now looking at this move, 38.2 is there, makes sense. Swing level is there, okay. You see it broke that trend line back down. Now if you're thinking that pound dollar could push up, so it does not retrace back down, it pushes right up, it breaks above 1.2990, stop loss 30 pips, take profit 50 or even more. Looking at the pound dollar pushing right up, then you could be looking at the pound yen pushing off this support to the upside. I would say a bit late, not the ideal position, but you'll be looking at above 1.190. Stop loss, you'll be quite wide at about 60 pips. The take profit could go back up to 190 to the upside, right? Driven up by the pound dollar. Then onto the US Swiss franc. We were talking about this earlier today. I know a couple of you lost on this morning where you got in as it bounced off. I think you're thinking of that gap, the fair value gap, and then it retraced. So you bought there, it came right back down again. The level I was watching out for was 8625, which is right there. Now the dollar looking like it's going to push back down again, or could push back down again. We're looking for it to break 8625 to the downside. You'd be looking at 8610, stop loss 20, take profit 50 to the downside. Okay, so US Swiss franc, we're looking to sell at 0.8610, stop loss 20, take profit 50 to the downside. Then onto the US CAD, it's done well, pushed down. Now looking like it's retracing slightly, right? Crossover, we're seeing that retracement. Keep that. Looking at that area. So I'm looking actually for the loonie to push back up. Remember again, we do have the CAD with the CPI numbers to be released on Tuesday, right? So anything you have, keep it really short term. I think that we could see it test and reject in this point like that. All right, so I would be looking at 1.3680, stop loss 15 at the very most. Take profit, you have 20, you have 45 to the downside. 1.3680. 1.3680. Stop loss 15. Take profit 45 to the downside. Then lucky last onto gold. We see that we talked about this on gold. Break above 2450 could trade down, but then we were also talking about the 2500 level. All right, so we saw that up to that 2500 that we were talking about before. Too many lines, take some of this away. 2500 hit, consolidating at that point. I think that if we need that even, I think that stays there, consolidate, we could see it push up to, it's a crazy thought. All right, this is a crazy thought, but because we've never seen gold at 2500, but we're thinking that if we can break past 2510, we could see get up to 2520. I wouldn't go too crazy on this because it just in that area is going to have a lot of choppiness. You have to be extra disciplined here on gold. We're looking at break 2510 could trade up to 2520. Okay, and then I see a question there on the pound kiwi. Pound kiwi again, pound dollar pushing up on strength. Kiwi showing that little bit of weakness. It shows a bit of double top retracement back down. So that's why we're seeing the pound kiwi retrace back up. Looking at this, 61.8 is there. It's bounced off 61.8 at this point here. Not because of that. Take those away. But I'm looking at this point here where it could push up. It's a small move. 2.1490, or not small actually. 45. We're looking at something like that. Right, break above that level, 2.14, 45 to 90 to the upside on the pound Kiwi. Not a pair that I trade, but that's what I see on the charts at the moment. Okay, so again, if you haven't already, do help me out. Click that like and subscribe button. If you're watching this not on the live stream, you're watching this on the video, do leave a comment below on your thoughts and ideas. I'll keep this stream running because we're seeing price continuing to move. If you are trading, I'm here to trade with you, share your trade setups, answer your questions as we keep on the live stream. Please trade well, trade safe. I'll see you all again tomorrow on the daily market analysis. Take care now.